The Fed cutting interest rates by 25 basis points at yesterday's FOMC meeting. And as we look ahead to 2025, many are wondering where the Fed sees the neutral rate of interest in the post-pandemic economy. That's the subject of our next guest's latest column. Joining us now, Nick Timiraos, chief economics correspondent at the Wall Street Journal. Nick, the neutral rate, we'll know it by the whites of its eyes or something, right? It's like this highly unscientific thing that the Fed is trying to achieve. What is that process going to look like over the next couple of years?
Well, it's hard to say. It's an interesting concept because if you go back more than 10 years, this wasn't something the Fed was talking about publicly. And even if you look through the transcripts, it wasn't something that really played a big role in their thinking. It was only after the long spell of the lower bound when then Fed Chair Janet Yellen began to socialize this idea that maybe rates would be lower for longer because the neutral rate had fallen. And so now it's something that, obviously gets a lot more attention, and the Fed puts a proxy for the neutral rate in their economic projections.
And Nick, I guess I should, let me just stop you before you go on, because it occurs to me that not everybody even knows what the neutral rate means. So first, tell people who are watching what we even mean by the neutral rate.
Yeah, that's helpful. Think about what the right interest rate would be to keep inflation at the 2% goal, so to have low and stable inflation with maximum employment. What is the interest rate that best gets you there and keeps you there when there aren't shocks hitting the economy? Now, that's unusual, kind of a nirvana-like scenario where you'd be hitting your goals and there aren't any shocks hitting. But if you kind of can back out where that might be, you can use that to figure out whether, should you be stepping on the gas pedal or stepping on the brake as you set interest rates to try to keep the car going at the right even speed.
And then, Nick, we have this other complicating factor, which you write about, which is that as the Fed tries to figure out here where neutral is at, we have Trump moving back into the White House and all this fiscal policy uncertainty. So how does that play into this as well?
It just adds even more uncertainty, all of this. So if you go back before the election, and you listen to what Fed officials were saying as they prepared to and then began to cut interest rates, it seemed as if the big story for 2025 was going to be, all right, we know we don't need to stay at, it was then 5.25% to 5.5% Fed funds rate. So we're going to go lower, but are we going to go into the mid threes, the low threes, the low fours, the high twos? What's the destination? Where are we going here? And now, on top of trying to figure out that destination, I think and you saw this yesterday with some of their inflation projections, stepping back and saying, well, wait a minute, are we even going to be able to do that if we're hit with new shocks, potentially to growth or inflation from changes on trade and immigration and deregulation?